I ended up closing $176,000 in profits today, and I had two very, very good trades on Tesla. And what I want to do in this video is explain to you how those trades were setting up this morning, as well as how you can stop getting tagged out of your trades only to watch the market completely reverse. This is also going to be a great video for those of you who are focusing on Tesla for the next couple of weeks and couple of months, because we will be covering major support levels that you need to watch for. Right now, I'm looking at a 1-minute chart of Tesla, and you're going to see that today I alerted my private academy and our Discord at 9:34 a.m. that I was buying 200 of these October 18th $220 calls on Tesla. You can see that this is an alert from Black Box Stocks showing that big money was buying a ton of these calls. And so if we go over to the chart on Tesla, you're going to notice that, first of all, if we just zoom out on a 1-hour chart, that if we were to take a Fibonacci retracement from swing low to swing high, that our smart money zone on the 1 hour is sitting right between $215 and $220. If you want to learn how to draw these zones out yourself in detail, go and take our free Smart Money Zone course, which will be in the description. Now, I was telling everyone on X and within our community that if this $220 level broke, that the next smart money level would be down at $200. This level is here because if we take our Fibonacci retracement from the swing low of August 5th up to this swing high of $263 on Tuesday, October 1st, the smart money level is sitting right here. So I was expecting short term a potential bounce within this smart money level. Market makers, institutions, whales, they understand that while people are looking to load up at this zone, that they're going to have hard stop losses set underneath $220. So what they'll purposefully do in most cases is drive price through a key support such as $220 and tag everybody's stop loss out. Now, the thing you have to remember is that your stop loss is their entry. So while they're looking to tag you out, they are actually looking to get in as soon as you close. So if we look at this 1-minute chart, you're going to see that I was hoping price would bounce around $218. This did not occur. Instead, we saw what's called a stop hunt. Stop hunt is what we just went over. That's when they purposefully drive price through a major support level to tag all of these stop losses out. And in most cases, what will occur is price will instantly bounce right back up. So as we saw this sell-off happen within my community, I said that I was going to average down and buy 200 more because this is either a vicious stop hunt or we're actually going to $200. I said if this shelf gives up and is not a fake out or stop hunt, Tesla for sure will go to 200. With this price movement, I think that it's a stop hunt. I said, and the major reason for the thought that I was a stop hunt is that the 1-hour BX trender prior to that sell-off was showing higher lows. So for those of you who are Academy members, you know that bullish accumulation shows itself when the BX trender is making higher lows or shifts from dark red to light red. That's a sign of buyers stepping in. This is why I decided to hold on to my calls until at least 10:30 a.m. And you're going to notice that that candle bounced and then closed with higher lows on the BX trender. Jokingly, I said, look at this BS, tons of volatility, can't make this up. Market makers are a bunch of effers. And the reason that I was saying this and I was so mad is because, like I was telling you, they're purposefully driving price through this level to tag people out. And you're going to see that from that sell-off today, price bounced about 2.5%. So how many people got tagged out of that sell-off only to watch it fully recover? Now, I'm still holding my 2026 calls for Tesla, and I plan to continue to hold those as long as this smart money level does not break. I'm okay with the 220 level breaking, but as long as this 200 and 190 level is intact, I will continue to hold my Tesla calls. If that were to break and we were to see the monthly chart close with lower highs as we are right now, this is a very bad sign. So I want to see continued highs, and I want to see on the monthly chart the BX trender continue to show strength. The last thing to notice here is that the TTM indicator, which is this dotted line at the bottom, shows a squeeze. Now, the longer that we have squeezes, you can see last time we had a squeeze here that lasted for about 1.5 years. Price ended up breaking out 800. Price ended up breaking up 1,500% in 800 days. Time before that, we ended up having a squeeze and price ended up breaking out 140%. So if we can get a squeeze release here, we could see price, as we expected, into next year move its way back up to maybe 350 and 400. If this monthly chart closes like this with a lower high on the BX trender, I do not believe $300 will happen for Tesla by the end of December. If you want to learn more about all of the indicators that you see in this video, as well as the proprietary settings and the step-by-step trading system that I've built, you can take all of our courses completely free with the link in the description.